Good morning, traders. It's Monday, the 31st of July, 2017. Thanks for joining us this morning. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The markets are allocating to risk this morning. The leader this morning is in the on the leaderboard that I track. The leader is the Eurostox 50, trading up 10 points at 0.29%. We're up on equities, but nothing huge. The second most advanced commodity or index is the Dow Jones, up 57 points or 0.26%. The laggard this morning is crude oil. September crude is trading at 49.52.53, down 19 cents or 0.38%. Crude, of course, has been tearing up over the last week or so on indications that moves are likely to be made by Saudi, and also based on the sanctions against Venezuela for the unrest that's going on over there. So it's a fundamental based move there. It is a fundamental product. Gold's trading at $1,273.80, down $1.50. As far as what we have as far as news flow this morning, there's more and more talk from Wall Street gurus that the market looks to be headed for a correction. It's interesting. I bring that up. I don't pay that much mind. Whenever it happens, it happens. I'm not. My approach to trading is that I don't have pockets deep enough to try to be a part of the initial move if we do have a correction. But generally, we get an opportunity to do something with the ensuing movement. So I'm not too concerned about that, but it is out there. There's a lot of various things out there uh, relating to Bitcoin and many others, but I don't think they have an impact on us directly. The markets are rallying again overnight, starting with the European Open. Um, And that's all we have. The Eurozone advanced CPI estimate 1.3% in line. Eurozone June unemployment rate 9.1% better than 9.2 expected. This is the lowest since 2009. And then as far as what we're expecting for the week, it is Monday. Quick run through what we're expecting for the week today. What's remaining is the 9:45 Eastern Chicago PMI. Remember, this is a subscriber number. Don't forget also that it's the last day of the month. It's the last day of July today. But at 9:45, we're expecting Chicago PMI. The subscribers get it around 9:41, 9:42. So we're likely to see the move ahead of time. So if you're in a position and you don't have enough cover, make sure that you have some sort of protection or are out before 9:40. Pending home sales at 10 o'clock. We're expecting for June 1.0%. And by the way, Chicago PMI, we're expecting 59.0, prior 65.7. Again, 59.0 for July, Chicago PMI. Pending home sales for June, 1%. And that's pretty much it for the day. As far as the week, tomorrow we get German unemployment, PMI, GDP. We get Eurozone PMI. We get UK manufacturing. In the U.S., we get PCE core, personal income, manufacturing PMI, construction spending, and ISM. A lot of numbers tomorrow. And remember, Tuesday generally is the day with the widest range in the ES. Wednesday, we get Fed's Mester and Williams, Euro PPI, Eurozone PPI. Thursday, we get UK's BOE bank rate decision and inflation report. We get the press conference with Bank of England's Carney. For Germany and the Eurozone, we get PMI. For the US, we get services PMI, ISM, and factory orders. And then, of course, it is the first Friday of the month. Actually, let's see, Wednesday, it should have said we get ADP as well. Friday, it is the first Friday of the month, which means non-farm payrolls. So Friday, non-farm payrolls, unemployment report, average hourly earnings, and trade balance. And then Germany reports on factory orders and construction PMI. Okay, so the week looks busy. Tuesday, Thursday, and Friday, a lot of numbers coming out this week to look out for. As far as what we were expecting on Friday versus what we got, here's what the expectation was for Friday. Friday was we were looking for the market to test up initially, to drift up. Um, it was opening slightly lower than where it closed after the big drop on Thursday and then the ensuing correction into the close. Expected some responsive buying up and then looked for we were looking for responsive buying up and then an impulse down and a continuation down with a double distribution profile. That did not happen. Friday did not see that plan. Friday saw hypo 2, which was a test down initially with an impulse up and a continuation up, and that's basically what we got. Here's what Friday looked like. We got the drift down and then impulse up. There's 4.75. It wasn't as big as I'd like to see. And then continuation up, and we ended up with a neutral day. So initially we broke the IB low Friday morning, and then we broke the IB high on Friday afternoon. We had a neutral day up. We had actually a neutral extreme day, even though we didn't move very far from the IB. We closed at the extreme of the day. We closed at the high of the day on Friday at about 24.70.75 versus 24.71 high. And then we continued to drift up overnight. So we could see that on Friday, once we put in this low, the delta started turning up and it just continued to go up, buy, both on the large and smaller lot size. So some pretty good follow through there. The target Friday for any pushes up would have been 24.74 on the LVN of the prior day. The extended target's 24.78, which would have been too far for a low of 61.50. But that's what we got on Friday. And then as far as the overnight session, yet again, we get to the European Open right here. And then we catch a rally sideways on the Asian session. Not much to test. It just basically bounced between the point of control that was left behind on Friday and the lower high volume node, basically testing the value area of Friday. And then as soon as Europe opened, we get this strong move up, and the market has not moved away. So we get the impulse consolidation, and we are in the continuation phase. We took out the high by a tick to 24.75. The early high was 24.74. And we're holding steady above mid, and we're trading around the point of control. So inventory overnight is long. We have an inventory imbalance to the buy side in price and in delta. Some pretty good lifting on the European session there. As far as the what we've accomplished last week, given that it is Monday, what we've accomplished last week, yet again, we get higher lows, higher lows, higher lows. The trend up is still intact. The market remains strong with buyers. Earnings have been streaming in, and most companies have been beating. Some pretty decent percent of the companies have either matched or beat earnings, and that's what the market is being driven by. The Fed is not playing such a central role. We still don't know what they're doing with their balance sheet. A lot of just yap, but no real action from the Fed. But the market still puts in these higher lows. Despite the sell-off last week, we ended up pushing higher, and we're trading in the upper distribution. We're attempting to get into the upper distribution. We closed down here on Friday in the 71 area. But we're up here right now, 24.73.50. We're right here. So we're trading the upper distribution of the double distribution left behind by last week. But the key element here is we did close the gaps. We did test below. We tested the prior week's high volume node, if you recall, and then we turn back up, and we are continuing to climb. So it's still not friendly to the sellers, to the shorts here, even though they continue to persist as far as I can see. So that's the summary I have for you. One last thing, if we look at the hang on, if we look at the daily and look at what we've accomplished, really, this is a daily chart of the um, pit session, and let's close that. Close that. This is the daily chart of the pit session only on the S&P, continuous adjusted, and it's hard to ignore the fact that yes, we did bounce forever over July, August, September, October. Last year was terrible trade in my opinion. Then we started to break up on the election, consolidation, break up, consolidation, break up, consolidation, test down, break up, consolidation, break up, consolidation. This is a roaring bull market on the daily, and there is no sign of it abating yet. Not seeing weakness at all, and so keep an eye on the big picture while you're trading. Keep an eye that you're not, whatever time frame you're trading in, and of course, with trading, one of the key things you need to define about the person that you're listening to or the information that you're getting is what is the time frame. Somebody here could be making money selling short day in, day out on a very, very short time frame, but the big waves, the ocean waves, are leading in a bullish direction, and it is important to align ourselves with our bigger trades or stronger trades in that direction. If we can find them. So, and that's what I'm discussing here every morning is what my expectations are and how I'm looking to ride those waves. Although not successfully every day, but then again, we're traders. We don't expect success every day. It's just par for the course here. Today, we're opening again and still trapped. We had an inside day on Friday. We're still trapped inside of that range from Thursday. Today, open auction, looking for a small attempt lower, looking for an impulse up, and then I'm looking for a tag of 2478, and then for the market to wrap itself around that high volume node up there before the high. I don't expect new highs to be made today. I expect us to leave a small gap zone below if we're to follow tradition here. I expect a small gap zone to be left behind below, but overall I expect the market to test a little bit lower before it has an impulse up. So initial impulse, and the impulse we'd like to ride into the 78, and then looking for it to consolidate around that high volume node, the uppermost high volume node, until before new highs are likely to be made. If we get a push up initially, so we see an impulse on the open, we're likely to get tangled at the 2478, consolidate for a little bit, and then potentially push into the high, and then fall back in and fall into the consolidation, so that I would expect a profile that would look like that, where we move away, we put an excess low in, we leave a gap zone below, and then we consolidate around the 2478, accumulate energy throughout the day, and then expel the shorts and use that energy to push into new highs, probably by a couple of points before we fall back in. So I expect an excess high and an excess low today. Hypo 3 is looking for an open test drive into the prior day's range. If we drive into the prior day's range, expect us to get tangled at the 69 area at the point of control, and expect to test all the way down to 65 before balancing again. That would be hypo 3. Okay, those are the most likely scenarios given today's conditions. We are still likely to stay inside of Thursday's range, and we are basically canceling out the sell-off. We never got the continuation from Thursday. Sell-offs generally occur where you get a pullback, a consolidation, and at least a continuation down. But we have not seen this. We have not seen this kind of continuation on sell-offs in a while. It's every time the market sells off, it finds its buyers. A lot of index buyers, a lot of ETF buyers in the market. The market's very heavily weighted to that side. So every time it dips, it seems like many programs use that as an opportunity to get in. Anyway, that's what I have for you. Good luck today, and I'll catch you tomorrow morning. Take care.